What is business trading trust? Now, I'm just going to explain to you slowly what does this mean and how does this work. How we set up the business trading trust is we always recommended a corporate trustee. A corporate trustee is somebody looking after the trust. And you can have individual trustee or you can have corporate trustee. But the advantage of corporate trustee is, let's say you die, you can easily pass it on to your kids by just changing the directors and transferring the shareholder. Assets protection as well. Before we set up the business trading trust, we have to set up the corporate trustee, and then we have to have a settlor. Settlor is the person that set up the trust. They will give an initial sum, maybe like $10 or $100 to set up this business trading trust, just the initial sum. In the business trading trust, the most important person is this appointer. Appointer is the person that controls the whole thing. If this trustee is not good, it's not acting good for the trust, they can sack the trustee. They are the ultimate controller. When we set up the trust for people, we say, who is going to be the appointer? It's very important because this person is like a god. It can sack the trustee, get another new trustee. The appointer is the most important. But when you set up the corporate trustee, you also have a directors. Directors, it's the person that managing the whole business, and you also have shareholder as well. But this corporate trustee is not operating, it's just acting as trustee for the trust. Even though very powerful, right? They can do whatever, but they also have to follow the trust deed. Trust deed is the rule, the terms and conditions, the rule, what they can do, what they can't do. They got the power, but they still have to follow the trust deed. What the trust deed say is what they have to follow. And if they want to change the rule and change the terms and conditions, they have to upgrade. They have to change the trust deed. Otherwise, if they do something different from what the trust deed can do, then they can be in trouble as well. So they can't. The trust deed is a very important document when we set up the trust. The corporate trustee is the one that conduct the day-to-day operations, and it's the legal owner of the asset. That means, for example, if you go and buy business, then in the contract, corporate trustee is the legal owner of the asset. If you go and buy the business, you will see in the contract, it will put the corporate trustee's name. Or if you go and buy property, the legal owner of the property is the corporate trustee. The corporate trustee is the legal owner. So you understand that, like when you go and buy the property or buy the business using the trust, you will see in the contract, it will just put the corporate trustee's name. And that's how it works because they're the legal owner. All the income comes into the trust and all the expenses paid from the trust. And all the assets and liabilities is all held in this business trading trust. Then when they're operating the business will make profit, and then the income will get distributed to the beneficiaries. John is the beneficiary, Jan is the beneficiary, also their children. And the beneficiary have the right to benefit from the income that generate from assets held by the trust. So let's say if this trust is holding the business and the business making profit, the corporate trustee have to distribute all the profit to the beneficiaries every year. If they hold up the money in the trust, they're going to tax at very high tax rate, which is 47%. But if they distribute all down to the beneficiary, then the trust doesn't pay any tax. As you can see, that their family is not a big family. If they just distribute everything to John and Jan, sort of pretty similar to a partnership, right? It doesn't really help with the tax. So that's why we add this corporate beneficiary in there, which is the bucket company. We just distribute enough to John and Jan and the children, but the rest we want to put it into this wealth accumulation company. This wealth accumulation company can do a lot of things. It becomes like their bank, and it becomes like their finance companies. In all the money goes in here, it's also protect their assets as well. And it's also only pay tax on 30%. If they need money to buy a property, because of course you're running a business for the purpose of you want to make profit. And when you have the money, you want to enjoy it. What's the point of if you keep all the money here and then you're not growing it? Company, it can be like their finance company. They can borrow the money from this company to buy property or to buy another business or to get some assets to build up their assets and all that. It's a really good structures to have this wealth accumulation here. We don't use this company to trade with other people. The risk of getting sued is like if you open up to the public, if you're trading with other people, then there's a chance. But this company, it's just like your safe, it locked away. Nobody really know. It's your wealth that you accumulate all in here. Choosing your business structure is very important. It's very different. Like when people first start the business, they always say, oh, I just started as a sole trader, or I just started as a partnership. It's fine. If you don't have any assets in your own name yet, and you just start up and you want to be a low cost and you want to try it out, whether the business is working or not, you're not sure, then that's okay. But later on, if your business is really doing well and it's really growing, then you better change it, because sole trader and partnership, it's really mix up your personal assets and your business assets all together. And if something happened, like just one little mistake, you're going to be all wiped out. All your asset, hard-earned money is all gone. So it's not worth it. It's not worth to stay simple. People say, I just want a simple one, sole trader or partnership, but it's actually make it worse for you. If you set up the right entity, for example, you can set up a business trading company, you got business trading trust. It can separate your personal and business assets. And then also it will reduce your personal liabilities in case of the legal issues. It also gives you a lot of tax benefits as well. And it gives you the rooms to do the tax planning. And what we really encourage you is to talk to us. What we do is that we look at each person's circumstances and where you are now, what problem that you have or what issue that you have, and where do you want to go? What is your goals? What do you want to achieve? And then we're looking the whole thing. We can come up with a good recommendations, what actually suits you. It's not one size fits all. Oh, because John and Jan have that, I'm going to have the same. No, because we understand the situation, but your situation might be different. So it's very important that you seek expert help to get it right. If you set up the right structure, it's just like you set up a right foundation. It will make your business grow high and your assets grow really high. But if you set the wrong, it's just like a house. I want to save money on building up that foundation, like getting a concrete, like not very solid. And then when you build up the house and when the thunderstorm come and rain and all that, the house just collapse or crack and all that. Same thing. If you set up a right structure for your assets, for your business, for your property, you're going to grow really, really high, and you're not going to worry about that. Even the rain come, even thunderstorm, even somebody trying to sue you and give you a hard time and things like that, you're going to have that peace of mind. It's so important. Just to sum it up, like protecting your assets and keeping your hard-earned money, really giving you that financial security and peace of mind, ability for you to achieve your personal goals is so important. Are you ready to protect your assets and save on tax? If you are, I really encourage you to book the free 15 minutes consultation with us. And you can call us 0297256169, or you can just go and visit our website, the tmsfinancial.com.au. And in there, you can click on contact us. There's a form and you just fill up the form, like are you a business owner or individual, and answer a few questions, submit that form. Then one of our staff will contact you and to arrange you to talk to our CPA tax experts to help you to sort all this thing out, to protect your family assets and reduce your tax by setting up the right business structure for your circumstances. Thank you so much for joining us today. Thank you.